Hey guys, I'm Anisha Gupta, and what we are talking right now is the gold, which has been glittering in this week, up by at around 8-month highs in the international markets at $1,890 per ounce, and the Indian markets had it even better at around 13-month highs at 50,000 rupees per 10 grams at one point in time. The depreciating rupee also has been a supportive factor for the bulls in the Indian markets here. And while the geopolitical fears are usually a temporary driver, but the Russia and Ukraine issue refuses to die down, and that clearly has been supporting the gold prices in the last couple of weeks there. Well, the US Fed dovish minutes also have done their job. We have seen the US dollar decline because of that. The US Treasury yields also slipped down, and that in turn also led to buying in case of gold. We also are watching out for the global inflation numbers, where the US inflation is at a 40-year highs, the UK inflation at around 30 years high, Germany inflation the highest since 2014, Italy inflation numbers are at a multi-decade highs as well, and that really has brought Pakistan down to its knees, where we are looking at inflation numbers much higher. So everywhere that you look, you are dealing with stronger inflation, and gold, what better than that as a safe inflation hedge. We have seen that premium into prices. So whether it has been about geopolitics or inflation, and then of course you had the crude oil prices trading at a 7-year highs, that in turn also has seen the gold prices up. The buying has been strong, whether it has been the investment buying, ETF buying, physical buying in India, all those factors have contributed. So the ETF buying internationally has been the best in the month of January in many years. The physical buying in the Indian markets 2021 was the best year in 6 years. We saw nearly 1,000 tons of gold import in the previous year. And if you look at the month of Jan and Feb as well, the bullion dealers and importers tell you that the numbers at this time around as well are expected to be on the stronger side. So gold is actually getting a strong support from everywhere as we see it right now. The other factor to watch clearly is going to be about the speculative trade or the bullish bets here that have continued to be on the stronger side as well. So while we have seen constructive gold buying, the premium slightly has been lagging. I mean, we saw all-time highs in the year 2020, and that time it was about COVID uncertainty, it was about weaker global growth. Right now what the markets are working with is the inflation and the geopolitical concerns. The technical inflection point is yet another reason. So $1,900 per ounce is what market sees as a very stiff resistance. Once gold breaks above that, closes above that, the expectation is that we are looking at higher highs onto this one. Watch out for the Fed rate hikes as well in the month of March. That is what gold is also factoring in. But history tells us that once the interest rate hike cycle starts, gold buying also comes back. Initially, there could be a knee-jerk reaction, but not for too long. And that's exactly what we are seeing in this year. 3.5% of gains in the month of Jan. And where we stand right now, we are more than 5% on the higher side for gold prices. Last year was weak, 3.5% of a decline. But when you look at the chart, 2019, 2020, 21, gold has seen stronger gains, and the expectation is that after a negative year in 2021, this year could be positive and perhaps double-digit positive by the time we close it.